Hello and welcome to Recap Radio. I'm Diego Cupolo, editor-in-chief of Turkey Recap, and this is our live show about Turkish politics and foreign policy. Today I'm talking to Wolfango Piccoli, co-president of Political Risk Advisory Services at Teneo, a global consulting company. Thanks for joining us from London, Wolf.
My pleasure, and good morning.
In this webcast, we'll discuss Turkey's economy, how markets assess political risk, and how years of high inflation have basically made life very expensive in Turkey. People listening to us are welcome to send questions. We're going to make this a quick one. We aim to talk about 30 minutes. So I'm here in Ankara, where yesterday the main opposition Republican People's Party, CHP, stood trial for alleged corruption in its 2023 General Congress, basically its internal party elections. For context, the case threatens to nullify the leadership of CHP chair Özgür Özel. But everything depends on a court ruling, which we didn't get yesterday, and the trial will continue on October 24th. In response to this court delay, the main Istanbul stock index jumped 5.4% yesterday. This comes after a 6% drop 2 weeks ago, following news of basically CHP's Istanbul provincial chair being dismissed. And it also follows a broader political and economic turbulence in Turkey since March, following the arrest of Istanbul Mayor Ekrem İmamoğlu, who is basically the CHP's presidential candidate. So, Wolf, how do investors view the crackdown on Turkey's opposition, and how do markets gauge political risk from these recent events?
I think in terms of the yesterday decision of the court in Ankara to adjourn the case, nothing is really changed. Actually, uncertainties have prolonged. And from my point of view, deferring the decision, the verdict actually helps Erdogan in his scheme of neutralizing, disabling the main opposition party. So yes, we have seen a reaction by the stock exchange, which is suspect basically people trying to make some quick bucks, some quick money, largely driven most likely by locals, but the lira appreciated by only 0.2%. So I wouldn't read too much into into the market movement determined by this court case. The reality here, if we look at the broader picture, we take a step back here, is that since March 2025, the 19th of March, when İmamoğlu was arrested, which was a big shock to the system, and İmamoğlu remains in jail. I think it's important to remind everybody here. We have seen significant outflows. The day of the arrest, the lira lost 10%, and it gradually recovered because the central bank spent almost $60 billion to try to sustain the lira. So those investors who were willing to give a bit of a benefit of the doubt and they were in, they took a hit. And most of them have not been back into the Turkish markets because there is a feeling that uncertainty is up. This CHP story is multifaceted. It involves individuals like İmamoğlu, a dozen plus other mayors. There is a direct attack against the party. And this is all unprecedented because we have seen political parties being taken over, being shut down by the courts in Turkey for a very long time, generally pro-Kurdish parties, but not only. But we have never seen an attack like the one that the main opposition party, the party of Mustafa Kemal Atatürk, is facing in these days. So we are a bit of uncharted territory. It's all wait and see. And meanwhile, I think if we go back to the economy, this is a very delicate phase in terms of the so-called stabilization program of the government, in the sense that the inflation is sticky. They've been fighting inflation now for 2 years, plus. And as you alluded in your introduction, the Turks are still feeling the pinch. So this is the politics is not helping at all what the central bank is trying to do in terms of tackling inflation.
Mm-hmm. Yeah, and this comes at a time when there's a lot going on in the region. You know, there's the Ukraine war, there's Israel.
Yes.
And from an EU and NATO standpoint, it seems like Turkey is basically needed as a stable and strategic partner. So you don't see a lot of criticism about the crackdown on the opposition, at least public criticism. So I'm wondering, does this mean that it's basically in the hands of the markets and people, investors, to put a check on the backsliding in Turkey's democracy?
Um, you're absolutely right. We have seen no reaction by the EU, certainly no reaction by the US, which is certainly less surprising. Um, and I think, in a way, if we were to be a bit more pragmatic here, the leverage of the EU on Turkey is gone long time ago. So even if they were to complain, I don't think it will make much difference at all at the end of the day. As for the market, I think it's mainly in the hands of the Turks rather than the markets, because foreign investors' exposure at this point is very low. If you look on the equity market, the foreign ownership is around 35, 36%. 10 years ago, it was above 64%. Okay. And if you look at the fixed income, we are talking about foreigners holding around, in total, around $20 billion of Turkish debt, which is around 10% of the total. Uh, if you look at foreign direct investment, has always been one of the weak points of Turkey. But again, certainly much lower now than it was 10 years ago during the peak days where Turkey will get 19, $20 billion a year of FDI. Now, in a good year, we get around 10, 11, which is less than 1% of GDP, which is extremely low for any kind of emerging market the size of Turkey. So the foreigners here are not really in the driving seat, it's the locals. And obviously, as usual, in Turkey, the first channel of transmission for any political crisis is the Turkish lira. That is, I mean, I would not pay attention to the stock market in Istanbul, frankly. It doesn't really tell you much about the risk premium attached to Turkey in these days. I think it's about the lira, it's about CDS on the bond side. And the lira, obviously, it remains fairly volatile. And if you look from the beginning of the year, the lira is down 17% against the dollar. And remember, the dollar is down 10% itself. And the lira against the euro, I think, is down 30, 31% from the beginning of the year. The central bank, as we mentioned earlier, they had to spend a huge amount of reserves in March to sustain the lira after the arrest of Imamoglu, around 57, 58 billion. They had to spend another 4 or 5 billion last week after the court decision on the Istanbul on the Istanbul branch of the Republican People's Party. And right now, the net reserves of the banks are supposed to be around $72 billion. So they can sustain a bit of volatility, but obviously, any depreciation of the lira makes the fight against inflation more difficult because the pass-through is very significant. So the central bank here is always the one paying the price for Erdogan political agenda.
Yeah, and for people that are not, economists or follow the market so closely, what exactly is the strategy? What do you think is the strategy behind spending foreign reserves to keep the lira stable? Because basically you see a 15% increase in the exchange rate on the lira versus the dollar for a long time. Is it a kind of like stabilized depreciation? What's the strategy behind that?
I think the reality here, there is nothing else they could do at that point. So they lost lots of credibility. They are not doing reforms. The fiscal is in a better shape, but they are still spending quite a bit. So the only tool they have that when the lira is under pressure is trying to sustain it with the reserves, assuming there are some available. And they need to sustain the lira because if you let the lira go, the inflation comes back. And inflation, I think, taming the inflation is the main priority of the central bank. And they are trying to do that while keeping the exchange rate kind of fixed, basically. So it's a very delicate act. And we are trying to achieve multiple goals with very few policy tools because the central bank here has not only not been supported by the government on the fiscal side in terms of reforms, in terms of credibility, even basic credibility of the data. Most of the Turks do not believe the official figure provided on the inflation by Turkstat, TÜİK, whatever you want to call it, and that basically makes the job of the central bank more difficult because inflation are not anchored, the expectations are not anchored. Um, so central bank here is left alone with few tools, at times very few, in other days, right now, a bit more, to try to tackle the volatility that is usually sparked by political events.
Mm. Yeah, and just recently, looking at recent news headlines, we've seen that the government's considering possibly to sell some bridges in Istanbul. We
Yeah,
also see an 8% tax being applied on yachts that didn't exist before. And we also saw a 40% raise in the country's exit fee. Basically, Turkish citizens that want to go abroad have to pay 1,000 liras now for every foreign trip. As a
yeah.
Venezuelan citizen, I know this well. I've paid those fees. It's a sting. It's a luxury tax on basically people that can travel. Is this normal? These different news headlines taken together, is it an indication that the Turkish government needs money right now?
I mean, I wouldn't put the taxes together with the privatization of the bridges. So let's try to unpack here for a second. Yes, I think there is a drive to raise fiscal revenues, which is not particularly surprising. And I think that drive is partially due to the fact that we have not seen a tax reform in Turkey. Şimşek pledged it 2 years ago. They passed a very watered down version. The problem is that there is a huge amount of tax evasion in Turkey still on the income side. And for me, what is particularly surprising, specifically considering the nature of the party in power and the traditional electorate, that we have seen the government targeting more in terms of tax evasion, the SMEs, the small shops, the freelancer, and so on, rather than tackling the big corporate. Okay,
Mhm.
and if we look at the targets of these tax evasion, anti-tax evasion drive, these are traditionally ACT party voters. So it's kind of puzzling here that they have not been trying to be kind of fairer as well. Um, and if I can add to this, what I think is also a double pinch for these people is that the adjustment that Turkey is going through the last 2 years in terms of this inflation has been largely on the shoulders of the average Turk because they felt the brunt of it. And we have not seen the government trying to do something about that because there was some fiscal space for some targeted help. I don't know, families with lots of children, widowers, low income families, and all this data is available in Turkey. So the government could have tried to soften the blow for certain categories on the social side. They didn't which I think has created lots of animosity. You see that in the polls now, how poorly the ACT party and Erdogan himself are doing. So there is a need to raise more revenues. They can be very inventive, as you give just a couple of example years. But the reality, what we need is a tax reform in Turkey, and I doubt that is in a that will materialize anytime soon because it's extremely political and extremely difficult. In terms of the privatization of the bridges, well, the bridges is a bit of a funny story. Remember, in 2012, Erdogan refused $5.7 billion, which was offered by a consortium involving Koç, a company from Malaysia, and a third party, which now I don't remember, saying that it was too low, the offer. I'm not sure they will get a much better offer in these days. Turkey 2012 was a very different economy. The perception of Turkey was very different. It was of a developing market that was doing all the right things, that was in a clear trajectory in terms of economic growth, potentially even the EU process. Right now, Turkey is not in this trajectory. It's actually going in the opposite trajectory. So in my view, foreign interest, especially the other challenge here in terms of the privatization of these kind of assets. You are not edged in terms of currency because you are gaining the tool for the people pay when they're crossing the bridge are in Turkish lira. Okay, so you need to have an edge here. So for me, if this idea of privatization or privatizing the bridges goes ahead, there will be two interesting aspects to monitor. What are the guarantees that the Treasury will offer in terms of traffic, the volume of traffic? Okay, because we have seen the Treasury offering guarantees in the past that were badly wrong. They overestimated the flow of traffic, and this has costed a fortune to the Treasury. So let's look at the guarantees that will be offered, assuming we get some transparency about that, which is a huge question mark. And second, whether they provide any protection to the potential bidders and winner in terms of currency volatility. The other alternative for Erdogan here is very simple. He's going to force some of the crony companies close to the AK party to get involved in the deal. It's not the first time that these companies are forced to make a favor to Erdogan in exchange for all the favors they got over the last 20 years past. So that could be an option here. But in terms of foreign investors, I would be surprised if we see much interest at this point.
Mm-hmm. And just to take a step back, how sustainable is the AKP's economic model? You have this opposition crackdown, and then you have this tax drive that you've been describing. How do you see it going forward? Can the AKP sustain this until the next election cycle, expected sometime before 2028 or in 2028?
Well, I wouldn't really define that as an economic model. Okay, I think it's a repression model. It's it's an authoritarian model, whatever you want to label it. But I will not define that as an economic model. More seriously, I think the economic model that the AK Party has been using over the last 20 years plus that they've been in power, where you have a huge emphasis on construction. You rely on the spillover and construction. On top of that, you put in the mix low value added exporting companies, textile, for example, and so on. That model is dead. Indeed, if you look at the figures in these days about companies doing the so-called concordat, the bankruptcy agreement, the top companies are all from the construction sector and textile, for obvious reasons. So the model of the economic development used for the last 20 years is exhausted, has been exhausted for some time. And even when we look at Turkish export, for example, which is obviously been a successful story, the bulk of that is low value added goods. Even the automotive, which is obviously is one of the shining story, is a story where you assemble in Turkey parts that are coming from somewhere else, and you do that because of a custom union agreement, and then you export these cars, these vehicles to Europe. Okay, but you still need a huge amount of intermediate good to put together these cars. Okay, the development of the green energy story will help on that front in terms of reducing the current account deficit of Turkey and so on. But the model is dead. And for me, the question here is whether we have the people left in government at this point, in their party, able to put together a different model. And my answer is no. Not only that, even if they were to put together a new model, and you see Shimshek talking about it every now and then, high value goods in the farcical medium term plan that was announced last week, they keep talking about that, digital, green, all the stuff that we've been hearing for years, but in reality, not much is happening. But doing that in an environment where rule of law is not in place or is questionable, depending on how you feel about it, okay? Where you have done a huge amount of damage to the education sector in Turkey for years, and the results are very clear at the high school level, at the university level, and so on. It's very difficult to devise a new economic model and implement it, especially when you know that you'll reap the benefits only 10, 15 years down the line. Whereas we know that the calendar in Turkey now stretches to what? Spring 2028, best case scenario, when the next elections are supposed to take place. And that is already stretched.
Mm. Yeah, what are the international implications of this? Because Turkey's economy is very tied to Europe, imports, exports are majority with European nations. But you also see growing Chinese investments in Turkey. At the same time, you have Russian energy dependency here in Turkey. So, do you expect changes in Turkey's economic outlook or trade relations regarding Eastern partners like Russia or China? Or do you expect Turkey to stick with Europe mainly?
They have to stick to Europe, and they need to hope that the European economy will pick up because it's dismal in these days. We're talking about growing in Europe around 0.91%. The big bet is on the new German government spending big time because it's the only country in Europe with some fiscal space, and so everybody will hopefully reap the benefit out of that. No, there is no alternative for Turkey. The technical standards are Europeans. These are the standards used by Turkish firms. There is a custom union, there is proximity, there is familiarity, and so on. China, I think China is more of a risk than an opportunity because the risk here is China is facing more difficulties in exporting its goods to countries like the US and few others as them, because I'm sure that others will follow Trump example. So the risk is that China will try to dump more and more of its goods in to third countries. We have already seen it in some Asian countries, for example. If you look at Chinese export, they're booming towards places like Vietnam, like Thailand, and so on. So for Turkey here, they need to be very careful. Now, the game that they're trying to do is to attract some Chinese investment, specifically in the automotive sector, to allow Chinese company like BYD and others to build cars in Turkey and export them into Europe via the customs union, so with zero tariffs. I think it's an interesting game. Hungary is already into that kind of game, but Hungary is a member of the EU, Turkey is not. So for me, the question here is how long it's going to take to Brussels to wake up and do something about that, basically. But from the Turkish side, remember, a few years ago, we were talking about modernization of the customs union, because remember, the customs union that we have in place goes back to 1993, 94. And is a customs union that doesn't include services, it doesn't include agriculture. So Turkey has been asking for a long time to modernize it. Um, Given what is happening in Turkey in these days, given the trajectory of the European politics, where if you look at the key economies in Europe, right-wing parties are all leading, Germany, France, Italy, even the UK, looking outside the EU, the ability of Turkey to get any changes to the customs union is pretty much zero at this point.
Mm-mm. Yeah, and can I ask about U.S. President Trump's call on EU, NATO countries to stop buying Russian oil? Obviously, Turkey imports something like 60, a high percentage of its oil from Russia and also gas. Uh, is that something that is applicable for Turkey? I mean, is it possible?
I
Are
would
there
be
alternatives?
surprised. I would be surprised if we see pressure from the Trump administration on Turkey on this issue. I think Trump has got multiple issues with the European Union. Some of them are actually grounded. To be honest, and therefore there is pressure now on the European Union to do something about the import of oil or energy assets from Russia. I think Turkey is in a different kind of basket. Turkey is also has been importing much more LNG from the United States as well. I think it's important to highlight that as well. So to go back to your original question here, no, I do not expect Turkey to face a similar pressure from the Trump administration anytime soon. I think when Trump looks at Turkey, it's about Syria, it's about the Middle East. It's not so much about the Russia-Ukraine war. It's not so much about Turkey-European relation. So different priorities in play here, in my view.
Mm-hmm. And I want to finish on inflation and how it impacts people on a personal level, domestic level. I kind of have a strange story here, but basically, inflation in Turkey has been very high. It's something like 30% officially now. But if you look at rent
Yeah.
increases over the last few years, we have about 120% rent increase in cities, major cities. And since 2021, it's 500% of rent increases. And I feel this directly. My rent has gone up exponentially in dollar and euro sums, right? I pay Turkish liras,
Yes.
but it's more expensive now for the same buildings. Um, Turkey at the same time leads OECD countries in food inflation. And I got to ask because I don't understand how this works. I went to go eat outside at a restaurant. I had rice and beans and some soup, lentil soup, mercimek chorba, nothing fancy for two people. And I paid $46, 1,900 Turkish liras for rice and beans, which I love. I was a child in Latin America. I can eat rice and beans
Yeah.
every day. This is not fancy food. There's not any meat in this, right? I know that rice and beans don't cost $46. So I'm wondering, how does that make sense? Where does the money go? Who's making the money? Is it like rent? Is it salaries? What's going on? Can you explain this for me?
Well, I think what is going on is that while you are sleeping, you are losing purchasing power because of the inflation, and that is being dragging on for years in Turkey. And as I mentioned earlier, those feeling it more than anybody else are the low income, middle income families, and so on. And specifically, inflation has been very high on basic stuff, food stuff, transport, and so on. Food inflation is a tricky one in Turkey. I was looking at that already more than 10 years ago, even during the good days, let's say, of the Turkish economy, because has always been fairly high. There is loss of inefficiency in the food production in Turkey. Inefficiency because we are talking about loss of family firms, small size firm who are struggling to do economy of scale, who are struggling to do the investment in terms of the material that you need to diminish the amount of harvest of products that basically go bad before they go to the market. Okay. And on top of that, what we also have seen always in Turkey, the season is key. Whenever you have droughts, the prices of food go up very significantly and very quickly in Turkey. And obviously, we know where the trajectory of the climate story in Turkey is heading. And then at times like this spring, we have the frost, which was also very detrimental to the harvest. So food inflation is a story that has been there for a long time. There is also, the government has been blaming the supermarkets for creating cartels. We have seen some fines by the competition authority. I think that was just done to appease the public opinion. But the structural issue here is that agriculture in Turkey needs to modernize, needs investment, and we don't really see much of an interest by the government and by the private sector about that. So that is one part of the story. The wider story is that tackling inflation is difficult, is even more difficult when you are trying to do it with one hand tied on your back, like it was the case of the central bank over the last 2 years. Remember, they started hiking rates very slowly. They wasted around 5-6 months to put together the so-called stabilization program, which basically entails hiking rates and not much else, apart from dismantling the KKKMA system, because we have not seen significant reforms. And they were left alone. There no support from the fiscal side in terms of disinflation efforts and no reforms. So the disinflation here from the 75% of 2 years ago, we are now around 33, assuming we believe the official figures. I don't, but these are the figures we have. And now this is the most difficult part. Bringing it down from around the 30s to the single digit is going to be the most difficult part. We have seen that before in Turkey. Okay, inflation is sticky. The August reading was bad. The target this year will be missed. This year, the government is targeting a middle figure around 25% with a plus minus 3%. I think it will be above 30% at the end of this year. So we are in the right trajectory, but it's very slowly and very painful for the locals at the end of the day. And this is not going to change in my view.
Yeah, just to finish, how do states tackle inflation basically? Because at the same time, we have the rent increases, which are obligatory in a lot of places, 43% hike this year to all annual rent agreements. So
Yeah.
if you have that sticking to rents, how do you prevent it from raising salaries in 6 months if rents are increasing 43%. What does the state do?
Well, it's not just about hiking interest rates. It's about reforms. It's about liberalizing the market. It's looking at where you have issues in the market that keeps prices artificially high, or they allow for certain operators to speculate on that front. So is liberalization, is more competition. In some cases could be privatization, but in Turkey, pretty much everything has been privatized at this point. And it's also, in my view, which I think is one of the extraordinary things that is missing in the last 2 years, is credibility. As I said before, the average Turk doesn't believe, he or she, in the figures from the Turkish Statistical Institute. If I don't do that, it means that if I got some money left at the end of the month, I will spend this money to try to buy a fridge, a car, a mobile phone, durable goods, like like they were doing more in 23, 24. Less recently, because I think it's becoming more difficult to get to the end of the month with some saving. So I'm trying to hedge myself by buying durable goods, okay? Which obviously makes the fight against inflation more difficult because consumption remains high, okay? So for me, one of the issues here is that the government has not done anything to instill more credibility in the official figures. They could have appointed some respected figure in the Turkish Statistical Institute that could provide more transparency about that. Whereas even last week, they were attacking ENAG, the independent observers, according to whom inflation is basically double than the official figures, rather than actually trying to create more credibility. So the lack of credibility in the official figures is, in my view, a huge problem that has been left unaddressed by the government since the launch of the stabilization program more than 2 years ago.
Well, thank you very much. I've been talking to Wolf Piccoli. Very much appreciate your comments.
Pleasure.
You're co-president of Political Risk Advisory Services at Teneo, a global consulting company. Thank you to the listeners who joined. If you missed the beginning of the show, you'll find the full recording on Spotify, Apple Podcasts, YouTube, and I'll provide the links to subjects we mentioned there. This podcast is a production of Turkey Recap, a newsletter on Turkish politics, foreign affairs, and business. Visit turkeyrecap.com for more coverage from right here in Ankara. Stay safe, stay well. Have a good day.
Bye-bye. Bye.